Thank you everyone for joining today's StashAway Academy session. So if you have looked at the Luma or the email we sent to you, this is just a flash session. In this series, we have 3 sessions. We will introduce how to invest with ETF, and the second session will be introducing how to construct a portfolio for yourself. And then the last one would be something about a very hot topic, which is private markets. So if you have only registered for the first session, please go to the email or Luma to register for the subsequent sessions so that you can have more all-rounded views about the entire investing for yourself. So let's not wait, and then we start the first session. Okay, so let me introduce myself first. My name is Angel, and I am the client advisor at StashAway. So today I will be the speaker for you to introduce how to invest with ETFs. So before we go into the details, let me take a couple of minutes to introduce StashAway for you. So StashAway, we are a digital wealth management platform that provides personalized investment solutions for every single investors. We aim to make the investing cost efficient, simple, and intelligent for everyone. So as you can see the screenshots here, everything is very easy and simple to use on our app. So just a couple of clicks, a couple of minutes, you can open an account and then see what's a tailored solution or tailored portfolio for you. And we started in 2016, so around until now is around 9 years of history, and we originated from Singapore, and we expanded to 5 regions. So in each region, we are regulated by the local regulators, and we are also backed by a few famous VC. So, and for our customer assets, we'll put into the custodian banks with HSBC and Citibank, so it is safe to invest with us. So we aim to be the personal financial secretary for every single investors. So we know that investing might be super difficult or seems to be very sophisticated for everyone, but we want to make it simple and easy and secured. So what we provide is at institutional level of asset allocations solutions for everyone, so that your investment is automatically but rebalanced and reoptimized at StashAway. And of course, if you invest with StashAway, we have no lockup and no certain minimum or maximum amounts. So done with the StashAway introduction. So we'll introduce today's agenda. So what will you learn today? So today we'll talk about how to invest with ETFs. So of course, we start with what is ETF and then how do we build a portfolio with ETFs. So if we choose ETF to build a portfolio, how to select the best one? And then in terms of StashAway definitions and what are the considerations if you choose your ETF to invest. And finally, different ways to construct a portfolio for yourself. So we start with the first one first. So ETF, if you have any idea about investing, you heard a lot about ETFs. So what is actually an ETF? So ETF is actually a type of pooled investment securities that track a basket of securities. So ETF stands for exchange traded funds. So basically, it's just like you imagine like a basket that holds a bunch of securities, whether it's like Tesla, Apple, Amazon, Palantir, whatever. It is all the different type of securities. They are put into the single one basket. So that means if you buy that ETF or you buy that basket, you're buying multiple securities in one go. And especially like you see this is the idea of fund, but there's different funds as well. So you if you heard of like mutual funds, exchange traded funds, and different funds, for ETF is particularly traded on exchange, so it's very easy for you to sell and buy every day when the market is open. So these are some of the examples of ETFs. So the first one would be very common. A lot of you might have heard of it, which is SPY. It is a tracking of the S&P 500 index. So if you can see, this is the diversification or the number of securities here is actually 500 stocks. So is the weighting is depending based on the weighting of the stocks in that S&P 500. So if you say this is like just like a mini version of S&P 500 that you can easily buy and sell. And these are other examples. For example, TLT, which is tracking the fixed income, gold, which is a very popular asset class in 2024 and 2025. And if you invest in Hong Kong markets, you will heard of it. Tracker fund 盈富基金, which is tracking the Hong Kong Hang Seng Index. So these are the common examples that we have in the trading markets. And these the example I just shared is very like simple and plain vanilla ETF, but there are many different ETFs in the world. So with the updated figures in August 2025, there are actually more than 4,000 ETFs traded in the US markets. So there are many different type of ETFs. The first one I was introduced is style. So other than this plain vanilla ETF, some funds they actually launches different style ETF like growth ETF, value ETF, large cap ETF, and one very famous asset manager called Vanguard. They have different styles of ETF that you can find in the trading markets, and some are actively managed, just like the ARK fund. I think a lot of you have heard of Kathy Wood. So she managed a view of the actually actively managed ETF, and we see that recently in the industry there are more and more actively managed ETF right now. And when there is like a market correction that the investor would expect, there some of you might use inverse ETF to hedge against your entire portfolio. And of course index, the S&P 500, the SPY or VOO that you have heard of every day, and the commodities, which is the gold ETF I just mentioned now. And there are also industry ETF that is tracking a particular industry or particular sectors. So these are the different types of ETF that you can put into your portfolio, put into your own basket to construct your trading style or construct your investment style. And using the ETF as a building block to build your portfolio. So of course, there are many different ways to build your portfolio. Either you trade stocks or you trade commodities or whatever, but particularly for investing, for your own personal investment, why ETF? So there are different, I would say, very obvious benefits with the ETF. So first one is, of course, very important. It's very diversified because for ETF, we just say it just now, it's just a basket of many different securities in just one single security, which is the ETF. So if you just buy an ETF, you can be fundamentally diversified already, and it's flexible that you can buy and sell when the market is open. And of course, particularly with ETF rather than just mutual funds, it is very low cost because the expense ratio is usually a lot lower than the actively managed funds, which is mutual funds or active ETFs. And of course transparent, so because it is traded on the market, you can find the trading price or the information about the ETF on the exchange market very easily. And lastly, there's no minimum to invest in such ETFs. So ETF is actually, I would say, the best of both worlds between stocks and mutual funds. So when we think about diversification, of course, mutual funds is more diversified than the single stocks, and but mutual funds is usually not actively traded in the market. It only trades once a day, and it usually have a high fees, which is a disadvantage compared to stocks. But ETF, they take the benefit of the stock, which is they can trade on the trading market anytime, and you can buy real time, and of course it's lower cost. So I would say ETF is the best of both worlds. It's not only diversified, it's low cost, and this is easily accessed. So, talking about the differences between ETF and mutual funds, or maybe like trading single stocks. One thing that you might need to consider or think for yourself is the fee, because no matter how the return is, how good is the return, fee actually erodes your return in the long term. So in terms of fees, you have like platform fees, transactional fees, subscription fees, management fees. So I would say these four on the in the below is actually related to the product, and platform is more related to the channel that you choose. So actually fee matters a lot. So if you earn the same return, like 6% per year, if you choose higher fee option, which is, for example, the unit trust, not only you have entry fees, but management fee subsequently higher than the lower fees options like StashAway. So StashAway right now we only charge single fee, which is management fee from 0.2% to 0.8% per year, which is obviously a lot lower than any type of mutual funds or unit trust. So when it comes to ETF selection, so just now I mentioned there are so many different ETFs in the trading market right now, in the ETF universe right now. What should we choose, and how should we consider when we choose ETFs? So these are the four basic characteristics or the criteria we should consider when we choose ETFs. So first one is simple. So when you considering I am constructing my long-term investment, so you don't want it to be like very volatile or very exotic, right? It's for long-term investment. It's just basically considering about having plain vanilla simple ETF that is index tracking. For example, you will have some ETF that tracks the world equity, and some ETF that tracks the world bond, and also have some commodities into your entire investment portfolio. So first and foremost criterion that we should consider as being simple, that is index tracking. And the second one is cost efficient. of course, like just now we mentioned about fees, right? So you know that fees will be eroding your return a lot. So of course, choose a cost efficient ETF. So in terms of cost, you can what the first thing to consider is the expense ratio. So if you go to any broker website or just simply Yahoo Finance or Google Finance, you can check there's one certain term called expense ratio. So the lower the expense ratio, the better the ETF in terms of cost. And third one is liquidity. So liquidity is something about like how easy can you convert the ETF into cash. So how easy is you to buy or sell that ETF when there is like market correction or there's like the market's being volatile. So of course, the better liquidity, the better the ETF. So how could we consider like this is a liquid ETF? So first, the first thing is to consider the AUM, the under management of that ETF. Of course, the bigger AUM, the better, because the pool is better. The pool is bigger, right? And second thing is the trading volume every day. So of course, the higher trading volume every day is the better liquidity. And the last one, low tracking error. So when we talk about long-term investing, we just want to stay simple. And of course, like just now I mentioned, we want to be index tracking or that asset tracking. So the lower index, the lower tracking error, the better. So tracking error is basically just consider there's a benchmark. Maybe I take an example, it's like a S&P 500, and we also have different assets, different ETFs. For example, for tracking the S&P 500 index, we have SPY, we have VOO. So these are ETF from different asset managers. So if we compare how this ETF, for example, SPY, how good it is tracking the S&P 500 index. Of course, we want it to be synchronized, right? When the S&P 500 is going higher, and then we want the ETF to be going higher at the same percentage of to be it proportional. So if there so usually when the ETF is lower liquidity or lower have a lower AUM, usually the tracking error would be higher. So this is so you can see actually these four criteria is affecting one another. So so as StashAway, how we choose ETF is basically we consider these four criterion into our into choosing the ETF to put on our shelf and also put on to the investment portfolio that we manage. So you can see these criterion would be the institutional level criteria that you should consider when you choose an ETF for yourself. Okay, so coming to the last one, portfolio construction. So if we know a little bit more about ETF, then we know that okay, for long-term investing, we want to have ETF into our portfolios to build our investment portfolio to investing for long term. So what are the strategies? So the first thing that the concept that I want to introduce to you is very common concept when we talk about financial planning or personal wealth management as well. It's called the core and satellite portfolio investing. So if you can see, it's very intuitive. We have core as the bigger part in the middle, and we might have multiple satellite portfolios, might be smaller in size, that surrounding around the core portfolio. So, what's core and satellite? Okay, so core is basically that something that we want to have like a base or building block of our long-term investing. So we want it to be broad market exposure, index tracking, just like the example I just mentioned. We want to track it like have some world equity tracking or world bond tracking. And the allocation is usually around 70 to 80% of your investable income or your investable assets. And the risk level is usually lower. We want it to be very, very diversified. So we want to capture the beta return, which is actually is basically based on the economic growth in the global economy. So it is, I would say, it's the building block, the fundamentals of the portfolio, investment portfolio for ourselves. So for satellites, some people will say, I like certain market or I like certain industry. For example, right now, AI is a hot topic. Or in 2025, you see the China or the Hong Kong market is making a comeback. So in this satellite, you can play out the ideas that you have when you look at the news or your own preferences. So it is more focused exposure that we aim for, like potential outperformance, but not put everything into it, just around 20 to 30% of your investable income. So the risk level is usually higher, and because it's like more concentrated positions, for example, into AIs, or for example, into Hong Kong ETFs like 盈富基金. So it is trying to enhance the returns and add specific exposure, although that exposure is already in the core, but you still want more. So this is so core portfolio. How do we construct a core portfolio? Of course, we want to have it to be very diversified and lower risk. So how do we manage it? So for example, this StashAway investment portfolio, the general investing portfolio, we have tailored risk index, which is quantified. So let's say it's like a 22% risk index general investing portfolio, which is somewhat like a balanced risk portfolio. We'll have different, we will be very diversified. Not only we have like global equities, US equities, we're also putting into bonds and bonds into different sectors as well. So if you can see the examples here, for example, global equities or ETF, US equities, we still have like multiple ETF to contribute that sub asset classes. So we want to be as diversified as possible. So just now I mentioned general investing by StashAway. We are globally diversified and have multi-assets into ETF into that portfolio. It's tailored to your risk tolerance, and most importantly, it's like institutional level asset allocation that help you to build the fundamentals of your long-term investing as a building block. And of course, we will help you to do the auto rebalancing and reoptimization based on the economic cycle change, and we will do the reoptimization. So you just simply don't need to look at the news or look at the market every day. So it's all hassle-free. So for you to determine how do I choose core portfolio, just basically determine your own risk. So risk is determined by either your goals, your investment horizons, and also your own preferences. So let's say 6.5% SRI portfolio, which is a very, very conservative portfolio, is called, meaning that 99% of the probability of not losing more than 6.5% in a year. So in such a way, the general investing portfolio, we're more focusing on the downside risk management. So you can see the risk quantify, and you can be more assured rather than just like very vague, like conservative, moderate. How is it playing out? You can know it by the percentage. So even for different risk level, we are also very diversified, and you can see the returns in 2025. Year to date return as of end of August is performing pretty well. And for satellite portfolios, so for satellite, how do StashAway channel or platform can fit into the satellite portfolio? So we have two options that you can choose for. First one is flexible portfolio. So in flexible portfolio, we choose ETFs for you for each of the asset classes. So right now we have over 70 asset classes on our platform that you can gain exposure with. For example, we will filter it into like markets or theme or the asset classes that you can choose. So either in the flexible portfolio, either you can DIY your own portfolio, or you can choose 1 to 2 ETF that enhance your exposure, that is fit into your satellite portfolio, and you can adjust your asset allocation anytime. So this is an illustration. You can see like here in the app, we can show you the most popular one that is very popular among our investor right now. And then in the right hand side, you can see there's different features that you can apply for. Then you can look into the different ETF that we choose for that particular sector or that particular asset class. So this is very easy to operate on our app. Another option is the thematic portfolio. So the thematic portfolio here in StashAway, we are trying to invest in breakthrough technologies. We're four themes, which is a very hot topic right now. Technology enablers, which is something about AI technology and the future technology that can change the world. Healthcare innovation, the second one. Third one is clean tech, which is making a comeback in 2025, and consumer technology, which is a hot topic all the time. And we invest in structural change that trends that have strong and long-term growth potentials. So of course, it's all a bit higher risk or more aggressive than the general investing portfolio we have. So this is why we want to put into a satellite like portfolio for you to choose, for you to plan your own long-term investment. So how we can help a StashAway. So of course, like in StashAway, you can set up your goals, and then you can choose the investment that can meet to your goals. And of course, it's very easy for you to transfer in money and transfer out money whenever you want. So of considering something like this, just like making a monthly saving into a diversified portfolio rather than putting in just cash that earn you nothing. So just now I mentioned a few of our products. So this is the entire product suite that we have. The flagship portfolio we have is the general investing portfolio, which is usually used as the core portfolio of your entire investments. And of course, we also have cash management portfolios and also thematics and flexible portfolio. For alternatives, it is open for professional investors. So if you're interested, you can book a time or just ask questions in the Q&A box in this Zoom. So just now I mentioned the general investing portfolio. Here are some returns. Cash management. So cash management, just now I mentioned, is invested in ultra short-term U.S. Treasuries. It's good for parking idle cash, no lockup, no minimum, no maximum. So a lot of customers consider, if I have a lot of cash, I just don't want to put it into like cash in bank because it's earned me nothing. US dollar cash yield portfolio could be a good option to consider. And finally, a fee structure. So just now we mentioned there's exceptionally low fees compared to mutual funds or banks. So for a public investment portfolio or multi ETF portfolios, the annual rate is from 0.2 to 0.8. For single ETF, is 0.3%. Okay, sorry, I've go a little bit overrun, but this is very important. So, if you want to know more about StashAway or how StashAway investment portfolio could fit into your financial goals, you can scan the QR code on the left hand side to talk with any one of our advisors and at StashAway. So, it's more like a personalized talk that can know about like how do you build your build your long-term investment portfolios. And if you're interested to start using StashAway or see like how StashAway operates for your investment portfolio, scan this QR code. Try to open an account first. And for any new investor, you can enjoy 3 months of free investing up to this AUM. So I'll leave it here and see if you have any questions. Um, if you have any questions, feel free to raise your hand in the Zoom, or you can see there's a Q&A box underneath. If you have questions, you can type in and then I can answer live. If you have more personalized questions, just book the time, or later on we'll send you an follow-up email with the replay link of today's webinar, and or you can reply, and then you can reply to that email to ask questions about your own investments. Okay, I will maybe take 1 minute, see if you have any questions. If you don't have, then you can leave the meeting room today. And thank you very much for attending today's session. And stay tuned for our second session and third session. Okay, there's one question. Any recording available for this webinar? Yes, of course. Later on today, we will upload the webinar today to our YouTube, and I will send you the link if you have left your email with us. So we'll send you the link, and you can see the recording. Okay, thank you, David. Okay, if we don't have any questions, then we can end the session today. Stay tuned for upcoming sections, and stay tuned for my follow-up email. Then you can watch it again in YouTube if you are interested. So feel free to open and download the app and see how StashAway app is working for you. And if you're interested, you can book a time with any of our advisors to talk about your own investments. Okay, thank you. Bye bye.